The Enterprise Investment Scheme, or EIS, is a way for experienced investors to invest in early-stage companies and receive very generous tax relief. The investment could be into a single company or through a fund managed by a professional investment manager. The government set up the EIS to incentivise private investment in small and growing companies. Since its launch in 1994, over 33,000 companies have received investment totalling around £24 billion. So what do these young companies actually do? The range is very broad, from business software to artisan food delivery, from cutting-edge biotechnology to TV and media production, and anything in between. A well-known example of an EIS-backed company is meal delivery service Gousto.
Give it some gusto. The recipe box packed with flavour.
The company received investment through the MMC Ventures EIS Fund back in 2013. At the time, Gousto was 1 year old and a fast-growing but still loss-making company. It was delivering around 26,000 meals a month. 8 years later, in the first quarter of 2021, it sold 25 million meals, 3 meals a second. In 2020, not only did it become a unicorn after achieving a valuation of over £1 billion, it also delivered its first annual profit of £18 million on revenues of £189 million. Some early MMC EIS investors had the opportunity to exit at that point. Another example in a completely different area is Seracare, which received EIS investment through the Guinness EIS Fund. Sera is one of the UK's largest care providers, but it doesn't actually own any care homes. Instead, it's developed technology that monitors patients' conditions and matches them to the most appropriate carer. The business reached $120 million in revenue in less than 4 years and created 5,000 new jobs. Some of the early Guinness EIS investors had an opportunity to exit in May 2021. Of course, not every company will achieve success. There will also be failures and everything in between. The key requirement for a company to qualify for the EIS is for it to be young, independent and entrepreneurial. It must have objectives to grow and develop over the long term, and investors must take significant risk. However, that risk is somewhat tapered by the generous tax reliefs on offer. So what are these reliefs? There are 5 main ones. First, when you invest in an EIS company or fund, you can get income tax relief of up to 30%. Invest £10,000 for instance, and you could receive up to £3,000 back, assuming you've paid or are due to pay sufficient tax in the first place. Each tax year you can invest up to £1 million into EIS or £2 million if you're investing at least £1 million into companies classified as knowledge intensive. This could net you up to £600,000 in income tax relief. Second, if you make a profit when selling your EIS shares, any capital gains is tax-free, providing the investment remains qualifying. Third, the EIS also allows you to defer capital gains potentially indefinitely. So if you've made a capital gain in the last 3 years or up to 1 year after, for instance, you've sold a business, liquidated a share portfolio, or sold an investment property, you could reinvest that gain into an EIS. When you do that, you don't have to pay capital gains tax until you exit the EIS investment. The rate of tax you'll pay is the one prevailing at the time. If you've already paid CGT, that too can be reclaimed. For example, suppose you have an income tax bill of £30,000 and a capital gain of £100,000, with a CGT bill of £20,000. That's a total liability of £50,000. If you invest £100,000 under EIS, you could wipe out that £30,000 income tax bill. You could also defer your capital gain. This means rather than automatically handing over £50,000 to the taxman, that money is now working for you. You do need to keep the investment for a minimum of 3 years, and so when you exit, you either have to pay the CGT bill at whatever rate applies at the time, or you can invest it in another EIS and defer it again, assuming there are no changes in legislation. But what happens if the EIS investment doesn't work out? This brings us to the 4th relief, loss relief. Not only can tax relief boost investors' returns when things go well, it can also soften the blow if things don't go so well. Loss relief allows you to write off any losses against either your capital gains or your income tax bill. So even if everything went wrong and the investor lost their whole investment, the actual loss to a 45% taxpayer could be effectively 38.5 pence of every pound invested. The final tax relief is inheritance tax relief. Hold the EIS investment for at least 2 years, and if you still hold it on death and the company still qualifies, the value of the investment should be IHT free, potentially saving 40% tax. So just how risky are EIS investments? When you invest in early stage businesses, you should expect some to fail. That's why EIS is high risk and only for experienced investors. You could lose your capital, and you should not invest money you cannot afford to lose. EIS investments are also illiquid. You can't usually sell them in the way you would sell a quoted share. It's generally up to the fund manager or the entrepreneur to arrange an exit, for instance, by arranging a trade sale or an IPO. To keep the tax reliefs, you need to hold the EIS shares for at least 3 years, and they have to remain qualifying. Also remember, the value of tax benefits depends on circumstances and tax rules can change. You should seek specific advice on the tax benefits if you are unsure. For more information about EIS investments, please take a look at the Wealth Club website.